This is Eric Mwathe for the weekend of December 14th, 2013. Let's take a look at how the markets ended the week. We're going to take a look at the S&P 500, which was down for the second straight week, down about 1.65% for the week. Take a look at the Dow. The Dow was also down for the second straight week. This week down about 1.65%. And we take a look at the Nasdaq. Nasdaq was down the first week in a couple of weeks, down 1.5. So that's how the market settled for the week. Now let's take a look at some of the shorter term picture charts. We take a look at the Nasdaq Daily, and we can see that the Nasdaq Daily seems to be holding this level here. This line is holding the market together. We had broken above that level here, and we seem to be holding above that level. We also see that the market has come back to this. If you take the lows here, and this is important because this has held the market together. If you take these 3 points, draw a straight line. So this is a line here. This line, see that the market is bouncing exactly on that particular level here. So anything above this, if the market continues to hold that level and move higher, that's going to be definitely saying the market wants to move higher. On the other hand, we also have to be careful here if the market breaks below that support line. Again, we're talking about this support level here. If that doesn't hold, then we might see this market pull back. Right now, the market is bouncing precisely on Q. So my thinking here is that, you never know. This could be where the market continues bouncing high and maybe test recent highs. Take a look at the Dow from a daily standpoint, and we see that the Dow is contending with previous breakout levels of 15,680. So 15,680, which happens to be this level here, that level there. So the market is going to have to decide whether it wants to bounce off the 50-day moving average or hold support above the previous buy point. So this is something that we're going to have to watch and see what happens. Even anything below or slightly in this area around the 50-day moving average is not a break of the trend. It just shows that the market is testing this general 50-day moving average area. So, it's going to take a lot to really break down this market in terms of downward action. Right now, as we, go into the new week, looks like this is still holding above the 50 and above the buy point. So the market still looks healthy from the daily standpoint. Take a look at the Dow Hourly. What I want to show you here is this was the previous high, somewhere in that area there. The market would come and test that here and fail. Bottom line is eventually the market did move above that level. You see we've come back to that general area here, and we seem to be testing that breakout on a weekly basis. We'll see whether the market can eventually bounce off this and move higher, or who knows, we could crack and head lower. So one way, we're either going to bounce to the upside here, or we're going to break down and see the market start accelerating to the downside. We'll see what happens. Take a look at the Dow Transports this time, and again you see that there's a very important level here. If you take the lows on the RSI there, that low, this low, this double bottom here, and here you see that this market is back to this line which goes back way back, and you can see this has been support. Now this line has been support for a couple of months, if not throughout 2013, and the market has bounced off this level. Like last time it bounced off this level was here, which was this low. You can see right now we are back at that level there. Let me change colors here so I can show you that in a different, so you can see what I'm talking about here. Take blue, so it's this level here. I'm talking about this line. This has been holding the market together for a while, and you see we are trading precisely at that point there, which could actually begin moving this market higher. You see we are still trading nicely above the 50-day moving average. So this remains a healthy market as we go into the new week. S&P 500 hourly, you see that we are contending and trying to see whether we are going to find support. This was resistance at this level here. That resistance could turn into support now. So one way or the other, either we break, accelerate lower, or we bounce and we get that rally towards which is going to push us into the new year. So one way or the other, right here, market's going to decide rally or break. One way or the other, we'll see which one it decides. Let's take a look at the QQQ hourly here. And on the QQQ, you know, we were trading in this what can be seen as a wedge type formation here. So we seem to have come off that wedge. You know, it's not a break of any trend, major trend, but even though we see a break here of this trend here, so we are trading here, it's not necessarily a break, but you know, that's how you start building a move lower. So that break could begin something, or maybe it's just consolidation and eventually we move higher. Also want to point out that on the MACDs for the QQQ, they still remain below zero, so I don't expect any strong move in the market for now until they both take back this above zero level. So they need to be trading above zero if momentum is to continue back in full swing to the upside. Take a look at the CRB Index. Take a look at how commodities are shaping up as a group. Let's take a look at the CRB Daily. And it is... And what I wanted to point out here is we've seen commodities, you know, like steel, and we saw coal trying to rally early on in the month, pulling back some. So some of the commodities have been trying to bounce. But if you take a look at this chart here, you know, it says a lot. You see that if you take that low and this general low area, draw a straight line, which is right there, you see that this has become resistance. The back test has become resistance. We have a downward declining 200-day moving average. We have a downward declining 50-day moving average. So momentum is not strong. Momentum still remains bearish for commodities as a group. And also you'll notice that most of the failures have become at this level here on the RSI. Going back to this break here, which happens to be here on the CRB, resistance at that blue level, which is that high. Those resistance here happen to be that high, and a small pullback, double top here, which was this high here. And we see recently we came and hit that level. So I'm thinking commodities as a group could be starting to pull back again to this lower channel, which can be seen. There's a lower channel here. So maybe we continue trading lower and working our way lower over time. That's what it looks like on that daily chart. If you take a look at how gold is trading for the month, you see that for the month, gold is trying to find support here at 1232. We've talked about that. So trying to find support at 1232. We'll see which way it closes by the end of the month, but this is make or break for gold also. We'll see which way it also might go. Notice that there is another trend line on the monthly, which is this is a monthly here, and you can see somewhere around here you'd expect this to be tested, and maybe we get a bounce, who knows. On the other hand, if we break that trend line, which is also this low trend line from this lower channel here, this could really open the floodgate. So that's very critical area for gold. I think somewhere around here we're gonna see either support and a bounce, a very strong bounce, or we break this channel trend line here and we really see that move lower that some people are expecting in gold. Let's take a look at the BKX banking sector from a weekly standpoint. And you can see that we still remain nicely above the 50-day moving average, trying to hold the previous breakout level somewhere in that general area, slightly below that breakout level, but you know, holding above the 50-day moving average, is trading somewhere around here. So it's kind of safe to say that we are trending. We haven't really broken anything significant, especially to the downside, so no need to get scared. If you take a look at the weekly, you see that, you know, there's some signs of concern because we have improving highs here recently, but yet the technicals made lower lows. We also had back test of this low line here on the weekly RSI, which seems to have held it together here. So this is kind of resistance on the weekly chart, not the best, which might suggest that maybe this market is getting tired and could pull back. If you take a look at the MACDs, we also made lower lows, so that's another negative divergence on the MACD. So maybe this is just how we start slowly rolling over before eventually we pick that momentum to the downside. Let's take a look at one name that everybody has been watching this week, and it is Twitter. And you can see ever since we broke out above this weekly closing high of 44, somewhere in that range, I mean, this has been a major move by this stock. Bam! This week alone, up 30%. That's really amazing. The thing I want to talk about here, just the fact that take a look at what happens to stocks when they move above 69.10. So take note of this move above 69.10. Stock has stayed above 69.10 on the daily, which actually began after this wedge breakout here. So this RSI is again just confirming to you that it's not a measure of how oversold a stock is. It is actually a measure of the strength. That's why we see this major move higher over the last couple of days. Also, you can see it on the hourly, because ever since the hourly recaptured this level here above 69.10, which corresponds to this general area, especially this break point here, stock has been on fire, again confirming that whenever the RSI is trading above 69.10, that's where you're going to get your biggest move as far as price is concerned.